Just a quick introduction of myself. I'm the head of Canada for Affirm. I've been in that role since January of 2021. And prior to that, I was the CEO of a company called PayBright, which was acquired by Affirm. So buy now, pay later is a major topic in payments around the world in the past few years. And obviously it has gained a significant and growing presence in Canada as well, which I'm excited to talk about today. So a few agenda items. We're going to spend a minute talking about what a buy now, pay later is and isn't. In my view, provide a little bit of global context, dig into some information that we have on the adoption of buy now, pay later in Canada, and then share some thoughts on where we go from here. And if there's a little bit of time at the end, I'll try and leave a few minutes for questions. Just a quick introduction of Affirm so you can understand the perspective we're coming from. And this presentation is not a commercial for Affirm, although I will use a few Affirm examples and slides as we go through. Affirm's mission is to build honest financial products that improve lives. The company was founded about 10 years ago by Max Levchin, who was one of the co-founders of PayPal. And the idea for the company really grew out of the difficult experiences that he'd had with credit in the United States as a new immigrant and a student. So we focus heavily on a very customer-friendly product. We don't charge late fees or hidden charges or deferred interest. It's not possible with our products for a customer to pay more than they've agreed to, and we focus heavily on transparency and ease of use. And you can see on the right-hand side some of our stats. One thing we're very proud of is our penetration, especially in the US market, which was the original home market. We're available on 60% plus of all US e-commerce, which is underpinned by our exclusive relationships with Amazon, Shop Pay Installments, and Walmart. And then looking at our Canadian business, we believe we have the leading Canadian buy now, pay later network as measured by GMV, users, merchants. You can see some of the merchant partnerships that we're very proud of here, as well as the growth of our Canadian user base. And again, most of the Canadian operation was acquired by Affirm about a year and a half ago through the acquisition of PayBright. And today we have over 250 staff in Canada, and it's a major growth market for us. And I'm speaking to you today from Toronto. Okay, so defining buy now, pay later. What are we talking about here? There are a few things that buy now, pay later is and isn't. So I think most people on the call would have seen the sort of most common presentation of buy now, pay later, which is an installment credit option that's presented at checkout and that is integrated with a retailer's site. So a classic example is you're shopping on an e-commerce site, you see the full price of the good on the product display page, but you also see it, what it would mean if you were to pay in installments. When you get to the checkout, you can choose your installment plan, and then you complete your transaction. And that's instead of using some other payment method. And in Canada, that's typically instead of using a credit card. Now, there are multiple ways that buy now, pay later is being delivered. What I've just showed you is the merchant integrated way. And again, that's what most people would have seen. And here are some of the companies in Canada that operate in this way. We're increasingly seeing buy now, pay later delivered through shopping apps as well. And so this is where there's not a merchant integration. The shopping journey takes place partly or entirely through the buy now, pay later company's app, and settlement with the retailer is typically via a virtual card. And so this is something that Affirm offers, as well as other companies like Afterpay and Klarna. I would be remiss not to mention another spin on buy now, pay later, which we refer to as card-linked installments. So this is typically a situation where a customer has an existing credit card account, and a feature exists that allows the customer to split a particular purchase into installments. And so this is something that CIBC and BMO and Scotia either have live or are piloting. There are slightly different ways that these work, but it's usually a post-purchase way of splitting a purchase as opposed to a merchant-facing, merchant-integrated payment method, although it does vary. one thing that the fintech buy now pay later providers have really focused on over time is not just an installment payment method, but creating a two-sided network of consumers and retailers that creates an ecosystem of engagement and allows retailers to access new users and engage existing users through that network. So one of the stats that we track closely at Affirm is what percentage of our purchases are starting in our own channels, be it our website, our app, social media, email activations. And so this network effect and this customer engagement platform has become one of the most important aspects of buy now, pay later. It's the installment option itself takes a few different flavors. This is how Affirm does it on this chart, but other providers, have variations on this. We have the Pay in 4 product, which is the 4 biweekly interest-free payments for smaller ticket purchases, apparel, accessories. And then we have our pay monthly plans, which can either be interest-free or can be interest-bearing, depending on the retailer's preference and what they're looking to achieve and the order values that they have in their business. In Canada, the vast majority of our business is in the left-hand 2 columns, so interest-free. It's relatively less common in Canada for us to be doing interest-bearing. And I think if you had to very pithily summarize what is buy now, pay later and what is it not, it's not a credit card, and it's certainly not a private label credit card. And so when you compare the different aspects of credit cards versus buy now, pay later, you can see the differences. Credit cards is obviously a revolving credit account. Buy now, pay later is a simple single installment loan. Credit cards have a grace period followed by an interest rate on the balance. Buy now, pay later is typically, though not exclusively, interest-free, but there is no revolving or compounding or deferred interest. And in addition, a buy now, pay later tends to have few or no fees. So at Affirm, we don't charge any fees of any kind, including late fees. Overall, the product is meant to have customers pay off in full through a predictable set of installments without the risk of a revolving compounding interest charge. So what's going on in the world? Obviously, buy now, pay later is an old concept, but that term BNPL, no one was really using until a few years ago. This modern take on buy now, pay later has truly become a worldwide trend. We now have well-known buy now, pay later brands on every continent. And what you can see is that it hasn't been led necessarily by banks or existing payment players, by a new crop of fintech companies that have taken a fundamentally old concept but adapted it for modern retail and modern consumer behavior and modern technology such as smartphones. When we look at what's happening in terms of penetration around the world, different regions are at different stages of adoption of buy now, pay later. Australia and New Zealand are out ahead if we compare it to Europe and to North America. Australia and New Zealand obviously have seen great success of companies like Afterpay and Zip penetrating that market, starting certainly before the trend started in Canada. Europe also seeing increasing penetration. North America, really quite low penetration. And again, this is as a percentage of e-commerce GMV, really quite low penetration, even as recently as 2019. We've seen that accelerate to about 4% of e-commerce payments last year, and this is predicted to be 9% by 2025. And I would note that these estimates have been, every time this World Pay report comes out, the future forecasts of penetration keep going up and up. So we'll see what happens. So what's driving adoption? For merchants, we spend all day long, talking to merchants about buy now, pay later. They're very focused on acquiring new customers, working with us for marketing support and customer engagement, driving loyalty, helping enhance their conversion, promoting using buy now, pay later as opposed to discounting, and gaining some of the data and the insights that we're able to bring in terms of how their consumers are shopping. And on the consumer side, we see consumers very attracted to the transparency and the clarity of the product, the ease of use, the ability to budget against predictable installments. Obviously, it's very popular when the product is interest-free. It's now works very well in omni-channel. And there's also an element of trust we find where consumers are increasingly confident that they won't pay things like late fees, certainly in the Affirm case, or other hidden charges or deferred interest. So all of these things are working together to drive this high pace of adoption. So what about Canada? So we are starting to see a buy now, pay later show up in analyses of payment market share in Canada. On the left-hand side, we have e-commerce, and on the right-hand side, we have in-store. And the years here are 2019, 2020, and 2021. You can see that buy now, pay later really didn't register in the Canadian measurement until 2021, when it was apparently 3% of e-commerce payments and 1% of in-store. Especially in e-commerce, we're seeing credit card lose share of payments. That hasn't obviously just been driven by buy now, pay later, but also by wallets and by debit cards. And again, e-commerce was the initial bread and butter of installments, but it's catching up rapidly in store and as well. And we expect to see continued payment share gain in store in the coming years. So this is one of my, I think, one of the most illustrative and important charts. This is looking at the top 25 e-commerce merchants in Australia, the US, and Canada. What you can see in Australia is that the large majority of these top 25 merchants have at least one buy now, pay later provider they're working with, and at least half the time more than one. The US is about half penetrated in the top 25 with buy now, pay later, and Canada has only 4 or 5 of the top 25 that have buy now, pay later, and that's up from 0 a couple of years ago. And what we're seeing is in our conversations with retailers is we think this is going to move in the direction of the US and Australia here in the next couple of years. So a lot of green space still in buy now, pay later in Canada. That's on the merchant side. Similar on the consumer side, as we're in the process of merchants adopting it, and therefore in the process of consumers adopting it. This information is a little out of date. It's going back to last year, but when this survey was done, only 13% of Canadians had used buy now, pay later, which was about half the rate of the US and about a third the rate of Australia. So we are expecting to see that penetration and use by Canadians continue to increase. We also regularly survey not only our consumer base, but the public at large about how they're thinking about the product. And we ask a question about what is important to you when you're thinking about using a buy now, pay later solution. And the top 3 factors in terms of how many customers rate the factor as extremely important are transparency, trust, and ease of understanding. And so we find that it's less about the pure affordability and being able to afford something. It's really more about the transparency and the trust and the ease of the payment method relative to other choices. So where do we go from here? Looking ahead, how do we think this industry is going to evolve in Canada? We have a few predictions that we're making. Based on what we can see, we think the majority of Canadian retailers will adopt buy now, pay later. We are obviously well aware of the ones that have adopted it, but based on the conversations we're having, it is either being implemented or being evaluated by most retailers, and it is exceedingly rare to find a retailer that has decided not to do it. So we believe that the retailer adoption will continue. As the retailer adoption continues, we expect this to become a mainstream payment method that consumers use, where a given consumer will use their buy now, pay later account frequently across retail categories. And certainly this is the development and the trend that we've seen in other countries such as Australia, where it's not uncommon for a mature buy now, pay later user to use the product, a couple of dozen times per year. We think that buy now, pay later across channels will be table stakes. Again, at one time, it was very most popular in e-commerce, but we're seeing a lot of adoption in store now. We have retailers say to us, okay, you're doing a nice job for us in e-commerce, but 80% of my sales are still in store, and COVID's over. So, what have you got for us? And so in-store is definitely catching up. We also see ongoing maturation of buy now, pay later. There's obviously been a lot of startups in buy now, pay later in multiple countries. Ultimately, our point of view is that the largest and strongest two-sided networks of consumers and merchants will win, and smaller players will end up struggling to be as relevant and maybe consolidated, and some of that is already happening. We do think that the banks and card networks will continue to lean into their installment products, and that will become a good-sized business. Although we do believe that is a somewhat different business than we are in on the fintech side, where we're engaging consumers and creating this two-sided network. We think that's a somewhat different business model. And then finally, buy now, pay later offerings from companies like our own, we think will expand well beyond checkout, and there'll be more services offered to both sides of our consumer and merchant network. This is a chart that I've been tracking for a few years now, which is what has happened and is happening in Australia. What we've seen is that really for the first time in Australian history, the number of credit cards started to decline significantly a few years ago. And it coincided with the development of the buy now, pay later industry. And as best as we can tell, there may be multiple reasons for the decline of credit cards, but we believe an important one is consumers, and especially younger consumers, having buy now, pay later accounts and being able to access simple installment credit at the point of sale. And we think for at least some consumers that is replacing credit cards. It's far too soon to say what will happen in Canada, but we do think there's some interesting examples to look at in other countries. And then on the evolution of the product itself, these are Affirm examples, but certainly other players and other competitors are evolving their offerings as well. If we rewind the clock to 2013, it was the first year that we released the integrated checkout product that I showed you. The product has evolved since then. So following that, we had the virtual card, which could be used, result in a buy now, pay later transaction at any merchant that accepted Visa. We moved into split pay, or the pay in 4 interest-free biweekly payments offering. We then rolled out our marketplace with personalized merchant and product discovery. We launched a savings account. And then as this process continues, we're continuing to broaden. So we've released something in the last year called Adaptive Checkout, which allows customers to choose what installment plan is best for their needs. We're rolling out cashback and rewards. We are rolling out our super app, which contains all of our services into one app. Included in that is crypto, which was something in heavy demand from customers, being able to access crypto holdings through our app. And then something we're very excited about is our first foray into a physical card, which we call Debit Plus. It's a card that can be used at any point of sale, and you have the option at the time of your purchase to either pay now, as in a normal debit, or pay over time through installments. So not a credit card, but a debit and buy now, pay later card. So again, these are Affirm examples. Other buy now, pay later providers are doing similar things. But if installments was the starting point, there is now a breadth of services that's growing up around the original offering. And that is all for the presentation. And now I'm going to flip over to the questions and see what we've got. Okay, so the first question I'm seeing here is, how do we assess fraud risks associated with buy now, pay later, and who is liable for losses? So we, as the buy now, pay later company, are liable for the losses. So one part of our offering to retailers is that we won't charge back, except in cases where we believe that the retailer, may have been complicit or irresponsibly enabling the fraud, which is very, very rare. So part of our services is absorbing the loss. So then the question is, how do we mitigate those losses for ourselves? And that's part of our adjudication efforts, where we have a lot of data science and machine learning that goes into real-time fraud detection, in addition to a fraud team internally that reviews selected high-value transactions and things like that. Buy now, pay later firms seem to have lost value in the stock market in recent months. Could you comment on this? So I think that's certainly true. I think our view is that buy now, pay later has been grouped in with tech trends in the stock market. It's not necessarily specific to buy now, pay later. It's probably not a good idea for me to speculate as to the share price, but certainly we've seen the publicly listed buy now, pay later companies affected along with other big tech firms in the past 6 months or so. What can we expect for limit increases over time that buy now, pay later can be used to cover? So, this varies from company to company. The largest purchase you can fund through Affirm is $17,500. That's obviously subject to approval. So not everybody would be able to access that amount of funding, and it varies from provider to provider. We typically at Affirm adjudicate each transaction individually. So we're not providing an open line. Each transaction is its own adjudication. This is a great question. Who bears the cost if buy now, pay later has no interest and no late fees? So this is where the cost is largely borne by the merchant. So similar to a merchant paying interchange for credit card transactions, they pay interchange plus for buy now, pay later in order to access our network and the benefits that we bring. So certainly in Canada, the majority of our revenue is through merchant fees as opposed to consumer fees. And then as part of this question as well, we had, how does buy now, pay later impact my credit ratings? So we use only soft checks. We do not do hard checks, and we'll do a soft check each time a customer tries to transact with us. And currently in Canada, we don't report to the bureaus. We do in the United States. And I think this is a trend over time where buy now, pay later will increasingly be reporting to bureaus and helping to build up the credit picture of a customer. Once buy now, pay later regulation in Canada is introduced, how will it impact Affirm? I think it's still early days, but I can tell you our perspective is that thoughtful regulation is a good thing. Anytime a new industry opens up that operates somewhat differently than what's been there before, it's important for regulators to have a look and see if there's anything that can be improved. And we've already engaged with regulators on this. What I would say, however, is Affirm's strong point of view is that we are not in any way trying to break new regulatory ground. We regard all of our products as consumer loans, which have very clear and well understood regulatory regimes and requirements in each province, and we follow those. And we don't make a claim that buy now, pay later is in any way an unregulated product. We are slowly running out of time, so let's see what else have we got here. Do we have plans for introducing a loyalty program for our customer base? Yes, absolutely, and that's related as well to our cashback and rewards that I talked about a minute ago. That's coming out soon. Do you see buy now, pay later as a viable consumer preference for brick and mortar recurring expenses? That is not something that we have leaned into as a company. Things like gas, for example, or rent. When something is a sort of regularly reoccurring expense, we don't think that's a great candidate for buy now, pay later. But there are other firms that have a different point of view on that. And with that, I think we're already out of time. So thank you, everybody, for listening and for the great questions. I'm sorry we didn't get to all of them. Have a great day.